Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you the tradable news and data you need ahead of the Wall Street Open. Coming up, US stocks looking quite cautious, traders eyeing more big ticket earnings and rate cut timing comments. We'll get to that in just a second. Alibaba misses estimates. Alibaba's Q3 revenue misses the street, weighed down by weakness in China. And Uber's quarterly core profit and gross bookings come in above estimates. Now, a good afternoon to you. I'm Angeline Ong, and welcome to this edition of Beat the Street. Not long now before Wall Street starts trading, let's have a look at how equity markets are looking at the US 500 first. As you know, the US 500 has been tracking higher. It's like that grind up remains in play. Just showing you my trend line there. And as you can see, we are, this is an hourly chart. We have seen on an hourly basis, it is starting to continue ticking higher. We do have a few bits of economic data coming through. These are more B-list ones, I have to add, and it's the international trade numbers. We've got international trade for December coming in at negative 62.2 billion. We were looking out for bang on that amount on the Reuters poll. And also the goods trade balance for December was negative 87.89 billion. Not moving much, but they are B-list data points. Let's cross over now to Chris Vecchio, who's joining us live from New York, from Tasty Live, part of IG Group. Chris, it's a pause for breath for markets in terms of earnings, but we still have Disney and we also have PayPal after the market close. We've already heard from Alibaba and Uber as well. Do you think this is going to be enough to keep the momentum in the markets going?
Yes, plain and simple. None of these companies that have been releasing their earnings reports are any sort of bellwethers for the broader U.S. economy. There's a lot of interesting idiosyncratic stories out there, and some of these stocks like Disney are seeing volatility readings go up around these earnings reports. But for the broader indices, it doesn't necessarily matter. The market is clearly more concerned right now about the broader sweep of what's happening with the Federal Reserve. We have a lot of Federal Reserve speakers on the docket this week. We also have Treasury auctions this week. Yesterday's 3-year Treasury note auction was stopped through, meaning it came in better than expected. Yields were lower than when issued. We have a 10-year auction today. We're going to have a 30-year bond auction tomorrow. Those are perhaps more important signs for the broader market about how we are collectively feeling about the state of inflation, the state of growth, and the path of Fed policy. I'm watching the auctions today for bonds, for rates, and more importantly for FX, more than any individual earnings report.
Now, it's interesting you bring up the Fed, because we've got Susan Collins, Thomas Barkin, and I believe Michelle Bowman as well making public remarks. Do you think they're going to add to that mood music about Fed dialing back those the timing of the rate cut?
I think they're going to continue to say what they have been saying. Fed Governor Bowman, for example, she's been pretty ardent that it's not time just yet to cut rates. That's not going to be a change in tone from her. It'll be her beating the same drumbeat. Barkin may be the one who's a little bit more amenable to discussing the possibility of rate cuts along the way. But the fact is, we're really not in a place right now to shift our collective opinion about where we are heading in March, May, or potentially June. We need more data. Thankfully, while this is a quiet macro week, at least on the economic front for the United States, next week we are going to get the CPI report. The Cleveland Fed's inflation dashboard is now showing January headline CPI doing around 2.9%. It's also looking for PCE on the headline to come in closer to 2.2%. We're getting very close and making good progress towards the Fed goal ultimately. And if we can find ourselves looking at low 2% inflation figures by that March Fed meeting, it stands to reason that a March cut may not be dead after all. And that could inject a bit more volatility into these markets.
Thanks very much, Chris. We'll keep a close eye on that Fed Watch tool, and of course what the policymakers say and Fed speakers say as well. Speaking of earnings, we have Alibaba out with earnings already, missed its Q3 revenue estimates. This was due in part to a soft retail market and a weak recovery across the board in China. Of course, there's concerns now surrounding the Chinese economy. However, the company did boost its buyback by $25 billion Just checking in on the company's share price. This is the daily chart for you. And the real action really is on the hourly chart. Let me just show that to you because look at that over there. That's the hourly view. I can tell you that Alibaba has been, if I move further back on a daily chart, you can see that Alibaba has had quite a fall since back in the 2022 period. And we have seen several attempts in terms of technicals trying to break through that mark, 9820 mark. However, it has been unsuccessful and it's followed those trend lines, those moving averages lower. Alibaba, it'll be interesting to see what else comes out from this company. All sessions at the moment on the hourly chart. Here we go. Alibaba is ticking slightly higher, slightly reversing course there, but you can see that reaction right there. Uber is another one that is out already with earnings, and the company saying it sees strong quarterly profits ahead. This is after it reported market-beating results for the holiday quarter, thanks to solid demand in its ride-sharing and food delivery unit. Uber, which posted its full-year profit on a net basis, also said that its retention of customers was improving. Showing you the Uber chart because it is all sessions on the IG platform. And this is the hourly view for you, and Uber's stock there, as you can tell from the last hour, there is a small cross there, if you like, in terms of a technical. So it could be about to reverse course. But at around 12 o'clock, as you can see here, this red candle, it shows you that there was quite a drop-off. Entertainment giant Walt Disney, that's the big one reporting after the bell for its first quarter. Disney expected to have earned $1 per share, mirroring the 99 cents achieved a year ago. Sales forecast suggesting a modest year-on-year rise for the same quarter, with projections around $23.7 billion. Analysts anticipate growth across all three segments. That's entertainment, experience, and also sports. Walt Disney, also all sessions. This is the hourly chart, and it is ticking slowly higher after that move in the previous session, but it is slowly grinding higher as we count down to the cash open. Now, the last 3 months, if I show you the daily chart, have been quite tumultuous for Disney. It resolved a strike with writers at the quarter start and then reached an agreement with the Actors Union. It also announced a deal with Comcast for the full acquisition of Hulu and recently initiated a potential merger with Reliance Industries of their media businesses. Investors are keen to also hear about those developments. Now, another all-session stock that's due to report after the bell is PayPal. Earnings per share forecasts are for $1.36 a share, suggesting growth of 9.7% year-on-year, on a near 7% climb in revenues to around $7.8 billion. With the growing adoption of the company's credit business, its buy now, pay later solution is anticipated as well to have contributed well. Just checking in on PayPal's stock because it is all sessions. That is not the right one. Let's look at PayPal DFB for you. And there you go, that's the right chart. And PayPal's shares have been languishing in this narrow trend channel since around April of 2022. And it's been struggling to break out, but it's remained below the 7,800 level and is currently trading around 64.14. Strong monetization of its payments, and this is the payments wallet business Venmo, likely to continue helping its adoption rate, but what analysts say are robust PayPal checkout experiences and momentum in core peer-to-peer payments that are expected to have benefited from these results. And whilst we've got PayPal up, just wanting to check in on the NASDAQ as well, known as the Tech 100 on the IG platform, because the NASDAQ, as you know, looking at this chart, did really well in 2023. And there are concerns that it's looking a bit fatigued. IG's Axel Rudolph has been looking at the technicals and what it says.
Well, with the NASDAQ 100 trading water short term just below its record highs, I think the chart looks really, really interesting because from a volatility point of view, what we're seeing is a loss of upside momentum here just below these record highs we made at the end of last week. And these, incidentally, were also made just above the late January highs. And it's like a coiled spring. So we have a lot of pent up demand, possibly leading to a breakout. If it were to happen to the upside, we would probably see a pretty swift ascent towards the psychological 18,000 mark on the NASDAQ 100. But if we were to peter out here, we may have a move take us slowly down again towards our uptrend line, which goes back to October of this year. But basically, as long as we stay above the last reaction low, that's to say the low from the late January low at 17,119, as long as we stay above there on a daily chart closing basis, the trend is your friend and that is still pointing higher. So even if we see short-term consolidation at the moment, be ready for a breakup to the upside, which is likely to take place in the days and weeks ahead.
Thanks very much, Axel. It's interesting, the sprung coil motion there on his technicals. The EIA weekly data will be the key one to watch if you are trading oil futures on the IG platform. Just looking at WTI there, US crude stocks rising, rose 670,000 barrels last week. This is according to the API data. The US EIA has cut its oil output growth. This is the outlook for this year. And this comes as the Gaza war ceasefire talks continue. As I mentioned earlier, looking at this chart, this is a daily chart for US crude. We are seeing a potential breakout there in terms of this instrument when it comes to the 50-day moving average. Now, if it achieves or is able to break above that blue line, which is the 100-day moving average, and perhaps it could move further up. But by the looks of things and how this chart has progressed over the last few weeks, there has been significant hurdles in the last few months in breaking above that blue line, as you can see here. And actually, many analysts out there in the market say that this is more a demand issue, and that if the demand picture, even despite the geopolitics, does not improve, then we're going to continue seeing oil grind lower. Now, before we go, a last look at how the market is looking. We're now minutes away from the open. Let's just have a look at Wall Street, which is the Dow Jones Industrials. But the hourly chart might be one that will give us a better indication of how things are moving. And as you can see here, the market on the IG platform closes at midnight. And as you can see there, it looks like a cautiously higher open as we speak, at least for the Dow Jones Industrials. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom or @Angeline Ong on Twitter. This is IGTV.